Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Hi, everyone. Welcome to the Bloomberg Businessweek Weekend podcast. Top of mind this week, former President Donald Trump was convicted on all 34 counts in his New York hush money trial, a landmark jury verdict making him the first former American president to be found guilty of felony crimes. His sentencing now set for July 11th. All the details can be found on Bloomberg.com and, of course, on the Bloomberg terminal.
Our focus is on presidential candidate Donald Trump, now that we are about 5 months away from the November U.S. election, and on the concerns of some voters about Trump forever. We'll explain what that means in just a moment.
Plus, Jamie Dimon says there could be hell to pay if one alt asset class sours. We talk private credit with the folks over at Moody's.
And how money and markets really work in this economy? That's the title of a new book by financial educator, commentator, and Bloomberg opinion contributor Kyla Scanlon. Now, if her name sounds familiar, it's because she coined the word and the whole concept of the vibesession.
Yeah, great conversation coming up there. All of that to come. We begin with the November presidential race. As the rematch between Joe Biden and Donald Trump draws closer, political professionals are detecting an unusual concern for some undecided voters. The fears of not just 4 more years of Donald Trump, but Trump forever.
And as far-fetched as it may sound, the prospect of Donald Trump, should he find himself back in the Oval Office and then never leaving, is weighing big time on the minds of some voters. So writes our Bloomberg Businessweek national correspondent Josh Green. His story featured in the latest edition of Businessweek magazine, out on newsstands now, on the Bloomberg terminal, and at Bloomberg.com/Businessweek.
Josh is also the author of The Rebels, Elizabeth Warren, Bernie Sanders, AOC, and the Rise of the New Left. Also author of Devil's Bargain, Steve Bannon, Donald Trump, and the Storming of the Presidency.
We spoke to Josh before the Trump verdict.
I've been talking to a Republican and Democratic strategist recently who'd mentioned that they were seeing something strange in the focus groups and polls they were conducting, and that is that a lot of swing voters were worried that Trump was going to declare himself president for life if he's reelected in November. And as I did some reporting on the source of these worries, basically this is something that Trump likes to joke about. Of course, there was the January 6th riots that gave a lot of people pause, but it's a factor that I think isn't being paid a lot of attention to, but both Republican and Democratic strategists are seeing it and wondering if this is going to have an effect on the outcome in November.
You know, it's interesting, and Josh, we don't certainly have to tell you, but this idea that Donald Trump will say something and people will be like, well, that's Donald Trump. Like, you know what I mean? They're kind of dismissive. Is there something, though, different as he runs for a second go at the White House?
Yeah, I think there are a couple things. I mean, as you mentioned, you know, the Trump people sort of laugh this off as this is just Trump being Trump. You know, he likes to say outrageous things to get a rise out of liberals. He's talked a little bit about, well, should I maybe serve 3 terms? But while a lot of people write it off as just Trump being Trump, this particular group of voters seems to be listening to it and worrying about it. And as strategists have kind of plumbed the reason for this, they've come up with some interesting theories. And the best one I heard was that it was really, what was driving this fear was the Supreme Court's decision to overturn Roe versus Wade. A Democratic strategist told me that what that did was convince a lot of ordinary voters that things they wouldn't have imagined possible, like Roe versus Wade being overturned, or Trump abolishing term limits, suddenly seemed real enough that these voters were worrying about it. And it seemed to be pushing at least some of them back into Joe Biden's camp.
Well, you get into the piece that the idea of a president serving only 2 terms, whether consecutive or not, hasn't been in the Constitution since the days of the Founding Fathers by any means. It was ratified in the 1950s after FDR served more than 2 terms. Can you talk a little bit about the history of presidents since 1950, talking about the potential repeal of the 22nd Amendment, or at least alluding to the idea of serving more than 2 terms?
Yeah, absolutely. I mean, as I did a kind of a deep dive in this piece, what was interesting was that almost immediately when after the 22nd Amendment was passed, popular presidents and their advisors and both parties have kind of objected to it. Ronald Reagan said in 1987 he would like to overturn it. Democrats in the House of Representatives twice, once during Bill Clinton's presidency, once during Barack Obama's, tried to push legislation overturning it. So it's something that popular presidents sort of chafe at. But that being said, the hurdle to actually get it overturned and abolish term limits is almost unthinkably difficult. It would require large majorities in both houses of Congress. It would require large majorities of state legislatures to approve it. So it's not something that's plausibly going to happen. And yet still, people have learned that Trump is a norm breaker. It's something that gives them pause, and it's weighing on them as they make their decision on who to vote for in November.
Hey, Josh, there are focus groups, and then there are focus groups by those who have been doing them for some time that maybe you sit up a little bit straighter and take note. Like, I just do wonder, is there something that just makes everybody kind of be like, wait a minute, there's something different this time around?
Yeah, I think that's exactly what's going on. I mean, if you go back to 2020 and the January 6th uprising, it's sort of shaken a lot of people and made them realize that, well, like, maybe things aren't as smooth as we expect. Historically, when we conduct these focus groups and we throw out these kind of wild scenarios, voters usually push back and say, oh, that could never happen. I was able to sit in on a couple of these and sort of see this myself, and people are just much more willing to believe that crazy things can happen, and that maybe one of those crazy things will be Trump declaring himself president for life. As implausible as that sounds, I think, to most voters.
Well, I was struck by a woman who you spoke to who actually said that she would vote for Biden even if he is in a coma, despite the fact that back in 2016, she voted for former President Trump during that election. Talk to me a little bit about her thinking, Josh, and how this could move the needle with the undecided voters.
Yeah, well, the people I was focusing on in this piece really were that narrow group of undecided voters who are going to decide the election. A lot of committed Republicans like it when Trump talks about abolishing term limits. A lot of Democrats like to get upset about it, but their votes aren't really up for grabs on either side. So the focus of these focus groups and the voters that I talked to were people who had either been former Trump voters, former Biden voters, who are now undecided. The woman you mentioned, Laura McCammon, is a grandmother in Wisconsin I talked to, voted for Trump in 2016, but as she's witnessed January 6th, she's listened to MAGA media figures like Steve Bannon talk about multiple terms. It scared her into deciding that she wouldn't risk another vote for Donald Trump. And she told me, as you said, she's planning to vote for Biden in November no matter what.
Hey, while we have you, and one thing we wanted to ask you, and this was certainly a story that we've been talking about this week a lot, and this has to do with Donald Trump, a video posted to his social media account, that referenced a unified Reich as a potential news headline if he won a second term. Devil's Bargain, bestseller. You really got inside Steve Bannon and the road to the White House for Donald Trump the first go round. How are you thinking about some of the terminology that's being used, the rhetoric that's being used by Donald Trump?
Well, this is something that we've seen going all the way back to Trump's first run in 2015 and 2016, that kind of winking at the far right, either through phrases or memes or videos or what have you. I don't know whether this was intentional or not, but given Trump's background, given the praise he heaped on some of the Charlottesville protesters in 2017, another earlier controversy over anti-Semitism, it's something that people in the press and people in the electorate, I think, are very alert to. So when something like this pops up in a Trump video, you see the media pouncing, you see the attention to it. And it's something that the Trump campaign, either intentionally or unintentionally, hasn't really managed to fix and bottle up and kind of clean up their campaign.
Right.
But I think we can see based on this, it's something that we're going to have to keep an eye on going forward.
Right, and certainly those undecided voters are keeping an eye on too. That maybe explains what you just talked about in your story. Hey, Bloomberg Businessweek national correspondent Josh Green. Josh, thank you so much.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
Also this past week, JP Morgan CEO Jamie Dimon says he expects problems to emerge in private credit and warned that there could be hell to pay. That's a quote, particularly as retail clients gain access to the booming asset class.
JP Morgan and other lenders have been competing with the $1.7 trillion private credit industry, with giants such as Apollo Global Management taking on ever larger deals. We got an update and talked risks with Anna Arsov, Global Head of Private Credit and Financial Institutions at Moody's Investor Service.
Everybody wants a piece of this action, meaning either to invest in a business or build a business. And when the business is relatively mature, and particularly now with the opening of the leveraged finance market, and I'm talking about direct lending specifically, we are worried that credit terms will suffer, and eventually there will be deals were done, maybe less prudentially when there was less competition, particularly between the public and the private markets in leveraged lending. So we are concerned, and we're seeing actually credit terms deterioration. We are seeing competition for talent. As well, and at the same time, a lot of dry powder being raised that has to be deployed, and maybe deployed at terms that are going to be less favorable for creditors in the near term and medium term.
All right, so bummer for the creditors, right? The folks who need to borrow the money. But having said that, as we kicked it off with Anna, the idea that so many people want to be a part of it, doesn't that, I'm playing devil's advocate a little bit, but doesn't that kind of spread around the risk in the private credit market so that there's not just, one entity, one lending entity, if you will, that's kind of stuck holding the bag if things go wrong?
That is, diversification is always good of risks. The issue is that, and our statistics have shown that the biggest fundraising actually is going now increasingly to the largest players. So therefore, this is becoming a more concentrated market. I'm sorry for that. This has been a more concentrated market, both on the private equity side, but particularly on private credit. Fundraising is indeed going to the largest and more established players. So with that being said, diversification is very interesting because it is the same pension funds and insurance company who are investing on the private equity side, and also or sovereign funds are also investing in the private credit side. So they're all increasing their exposure. The good thing is here it is from a systemic risk perspective, these are different funds with different investment that are underlying. So there's no that big concentration of one type of a risk. Let's call it, subprime mortgage, US subprime mortgage, or US office commercial real estate in one type of a fund. It's diversified to many real money investors that have a long-term perspective and long-term investment horizon, and also without necessarily immediate liquidity call or risk. So that's the good about this market. You're absolutely right. Diversification of the investment community, and also not imminent liquidity draw that these kind of investors are coming in with.
When I'm wondering, are you going to come on our show and say that private credit is not hot? When does that happen?
You know what, so if you think about where we are and what inning, a lot of us have been talking about private credit as equivalent to direct lending. And direct lending is just another middle market now expanding to larger middle market leverage finance business. But private credit is beyond that. There's a lot of talk about potentially the ABS private credit market, which, if you listen to various pundits, anywhere between 10 and 40 trillion, any kind of asset from any bank that potentially can be sold. Is that aircraft receivables? Is that potentially data centers, or as plain as even commercial real estate that potentially can be packaged in a private securitizations that will have basically be deployed into the kind of the investment community, same insurance companies, pension funds, sovereign funds. So therefore, if you take a broader picture of private credit, of any credit provision that's not done by the banks but financing our economy, that means that this is going to be here to stay for quite a long time.
So Moody's, we know who you are. And you guys look at these things and try to assess risk. So where's the risk in the private credit market today?
So the risks are really, again, they are mostly housed, again, within institutional investors that are sophisticated investors, and the sub-funds. And again, pension funds have the largest part of this, then insurance companies, then sovereign funds. The growth into retail funds is what we have been raising as a particular concern. If you look at where the new BDC formation and business development companies, for benefit of your viewers here,
right,
is that there is the largest funds that have been grown is with retail or high net worth money. And the question there is, this type of funds have a different kind of liquidity calls, if you will, ability for retail investors to basically call their money on a quarterly basis.
Right.
And that's where the biggest growth has been. So one can say, you can be devil's advocate, well, shouldn't retail and high net worth individual also benefit from the growth of private markets? And the answer to that is, of course. But the second was, is this done in the prudential way, sufficiently with the right disclosure, so afterwards they really know what they're getting and they cannot get their money, overnight.
It's so funny that you say this. I was just having a discussion with someone in preparation for a panel, and this whole idea of even accredited investors, do they understand liquid versus illiquid, right? Because private credit, not as liquid as certainly kind of your bread and butter investments. And so do they understand going into one of them or going into a private credit fund that if they need the money or want the money, it's not so easy to pull out, correct?
Exactly. So typically how these funds are orchestrated.
And just got about 30 seconds. Yeah.
Yes, you can have a quarterly, small portion of liquidity. These funds that have established are big in this space, have a provision of bank clients to provide for that and more liquid assets. But not the point being is that investors need to really be aware that this is an illiquid assets and they're locked for some period of time and they cannot take their money back. And growth in that area can create disclosure risks, regulatory risks. That's what the funds should watch for.
Yeah, it's just, certainly a topic that fascinates us in a big way. Put a private credit story on the most, on the Bloomberg, and it tends to be among the most read.
$1 million a year salary for some of those folks who left the firm.
Anna Arsov, Global Head of Private Credit and Financial Institutions at Moody's Investor Service. Always fun to check in with you. Really appreciate it.
You're listening to the Bloomberg Business Week podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Dell was an interesting stock this week, closing at a record before earnings and then plummeting after earnings after its first revenue increase since 2022 wasn't enough to impress investors' high expectations for the company's AI server business.
We recently heard how Dell is expanding its AI factory with NVIDIA to include new servers, edge, workstations, solutions, and services advancements that speed AI adoption and innovation. You might recall, too, that CEO Michael Dell has talked about AI PCs being, quote, pretty standard in 2025.
I will say some industry watchers and analysts are a little suspect about, not just for Dell, but the whole thing about AI PCs. Maybe
AI phones come sooner.
Yeah, exactly.
And maybe from Apple.
All right. In general, though, we wanted to hear more about what Dell is up to when it comes to AI, which, as you know, has been around for a long time. They've been working on it. For that, we turn to John Rose. He's Global Chief Technology Officer at Dell Technologies.
We spoke to him before the release of Dell's latest earnings report.
Last year, the first year of the AI era, I think most enterprises were trying to figure out what should they do. And largely most of the large enterprises did a lot of experimentation. This year is different. This year, many of those initial experiments, which were really trying to figure out where to apply this technology for the best return. If you're an enterprise, you can apply AI to anything. But if you apply it to your supply chain or your product development cycle or something that really moves the needle from an economic perspective, that'll have a bigger impact. So I think today, most enterprises are triangulating on where to apply it, which then gets them to the discussion of how to apply it. And that's where, the panel we had when we were chatting kind of went, which is this is not a workload that's, sitting on the side used by 3 people. This is the center of your enterprise. It's going to run nonstop 7/24. It's going to power your sales process. It's going to power your customer satisfaction. And so choosing the right place to run it, whether that, that gives you the best economic outcome, the best control, doesn't get you into compliance and regulatory challenges, is really the dialogue that's happening now. And so a lot of the work we're doing that you mentioned on the intro around with our ecosystem around NVIDIA and Meta and everybody else is how do we reduce the complexity to make that decision? How do we make it easier for people to get started, to not have to do everything, and to really get the platforms in place where they need them? And in our opinion, one of the best places to do some of this stuff is clearly in their owned infrastructure. One, it tends to be a CapEx model, and 2, it's in your control, and it's much more predictable.
John, for years we've heard about the cloud being what's nimble, and the cloud being the place that we can do this stuff
and secure.
This stuff for less expensive. I'm wondering, the shift to on-premise is not a shift. It's been around since before the cloud. But why are we seeing and talking so much about this shift right now?
Yeah, remember, the cloud era was all about taking your existing workloads, your web servers, your email, your office productivity, and maybe trying to figure out a different way to operate it. By the way, cloud wasn't just public cloud. The cloud model pervaded everything. And so, the shift to autonomous, automated, elastic infrastructure happened with a set of applications that we understood well. The things we're building now look nothing like that. A large-scale generative AI system for an enterprise is arguably the most demanding and complex workload you will create in your lifetime. And so, we could argue that, an OpEx-driven as-a-service model that gives you lots of agility, but you pay by the drip, is not a very good outcome if the thing you're running runs 7 by 24 at enormous performance levels. You don't want that meter running. You want that meter to be predictable. And so it's just a different class of workload. By the way, we're big proponents of multi-cloud. A lot of the time, the best place to develop your AI system is in one of the cloud providers because they have a great tool chain. The best place to test it might be there. Maybe the best place to train your models might be there because you only need the infrastructure for a short period of time. But the minute it becomes inference, that you're putting it into production and it's using your data, which, by the way, most of that is on-prem even today, then it starts to become a very different discussion, which brings kind of this modern on-prem architecture that we talk about with the AI factory into play as probably one of the more logical places to start.
Well, what is exactly the concept of an AI factory?
Yeah, okay. So here's the important thing for people to realize. AI is a new workload. And by the way, it actually needs a new class of infrastructure. The type of compute is not CPUs, it's GPUs. The type of data is not traditional databases, it's vectorized data that lives in large language models. The kind of tools you use are different. And so what we talked about at Dell Technologies World was not a new set of products exclusively. It was you really probably need to have a separate type of infrastructure for your AI than you do for the traditional things that you do, those workloads that went through the kind of cloud migration we talked about. And what the AI factory is it's an articulation of what that infrastructure looks like, that it is accelerated compute, that it's a different kind of data architecture, it's a better and different type of networking architecture, and that it probably lives in a different footprint because it itself has different requirements than your legacy applications and the other applications you run in either a public cloud or a private environment. And so the AI factory is how do you create a methodology and organize all the technology to put that in play, whether it's at a rack level or even an entire data center that builds you the optimal infrastructure to run these new workloads that you're going to need. So think of it as just a paradigm shift. We're going to have to build new infrastructure for this new workload. It might be redesigning or optimizing what we have, and it might, in fact, be a data center build out.
John, it's really interesting, and I think we might have talked about this at the Bloomberg Intelligence event, but about, technology companies, they compete, they work with each other. And it was interesting at Dell Tech World, the keynote stage, to see Jensen Huang, NVIDIA's CEO, up there. And so there's really, you can see the partnership. You can see there's clearly a show of support from NVIDIA to you guys at Dell. What is the nature of this partnership, especially when they make their own AI server racks, which makes you competitors to some degree?
Yeah, remember, Dell's a unique company. We are obviously very large, and you could argue we're the largest technology integrator in the world. Now, it means something to different people, but basically, I don't build my own CPUs or GPUs, but what I do is I organize that technology into consumable units of IT that my customers across the world can consume. Now, when you look at what NVIDIA is doing, they clearly are the provider of some of the better GPUs in the world. There are other choices that we also work with. Mm-hmm. They also have organized their stack in a way that makes it very easy to consume, and I think they did a great job there. And so they have an early lead, and it's an important lead that they're making it much more consumable, and they're keeping the innovation cycle up. However, their ability to engage with the large enterprise across the world, they don't have we have a much larger sales force. We have a global services capability. We have the largest supply chain that's secure in the world in technology. And by the way, you also don't just need the GPUs, you need the advanced storage services. You need to integrate it with your existing infrastructure. You need to talk to your existing data, which, by the way, rides pretty much on Dell Technologies storage systems. And so the nature of the relationship is, look, hey, you're trying to build an AI factory. There are some leading edge parts that absolutely have to be produced. And one way to actually make sure that they happen correctly is to integrate them into a system, an early system, like what NVIDIA does. However, those parts are decomposable, and then they can reassemble into other form factors that companies like Dell can take to a much more scalable market, like the announcements around Edge and other areas. We have the ability to reach more customers than anybody in the world. We need partners to help us build the technology to bring it to them.
Is your partnership with NVIDIA a little bit different? Is it a deeper one? Because you do have partnerships with other server manufacturers as well and others. Is it a deeper relationship, or how would you call it?
We work with, we work with a lot of companies. What I will tell you is it's the first one. It was the deepest. Last year, we announced Project Helix, which was the first time anybody articulated putting all the parts together into something people could consume. So it has a significant first mover advantage. Okay. However, like you said, we work with a lot of companies and we have a lot of partners.
Yeah, I'm wondering how big, John, the AI server opportunity is for Dell in 2025, and then how big it could be over the next few years. What are you folks talking about internally and externally?
Well, so I'm a CTO, so I'm not going to talk about any particular year.
But are you really busy, John?
I am extraordinarily busy. But let me paint a picture that's a little longer term. And that is, look, we are, as I mentioned, we're in now year 2 of the AI cycle, the modern AI cycle, and year 1 was all about surprise, get organized. Year 2 is about the first kind of enterprise deployments and kind of the prototypes. What that means is that the enterprise build-out hasn't actually begun. Really? And if we look at the size of the AI market today and what's going on, it's a pretty interesting market. What's happening is we're building the foundational technologies. We're training the large language models, which is a very robust ecosystem right now. We are developing the tool chains. And as you can see from just the state of the industry, it's a pretty exciting and a pretty significant shift. That is in front of the enterprise cycle, where conservatively, most people, when you look over the long term, the AI cycle is about rebalancing a sizable portion of the work in the world into the machine layer. And so as that occurs, it represents, sometimes we use the phrase, we're in the training era now, we're about to enter the inference era for enterprise, which is AI gets put into production. And when it does, you can calculate, imagine a world where, a third of the work is now happening in a machine layer. It's being done by a machine, an AI system. What does that look like? How big is that? Well, you can't calculate it accurately, but it's a gigantic number, and it's as big as the internet build out. It's as big as the Industrial Revolution in many of the discussions that we have. The timing on it, it's an extended cycle. This will be a 20-year cycle. But we're about to enter that phase, and what it tells us is it's a significant amount of replumbing of enterprise. It's building out AI factories. It's rethinking your data strategy. It's rethinking your footprint in the multi-cloud. And all of that tends to, given our breadth and depth in our ecosystem, drag us into an awful lot of customer conversations and a pretty active world, even in advance of the significant build-outs occurring on the inference side.
So if we're only in year 2 when it comes to AI, where are corporates in their AI journey? How do they adopt their technology? We know Dell won a meaningful chunk of Tesla's AI rollout, for example, but where are corporates in their AI journey?
Yeah, the corporate, as I mentioned before, last year it was all about getting your feet on the ground, understanding the technology, learning what a large language model, learning what RAG was. And this year it's all about finding those first projects. The first projects are largely under development in most large enterprises, and some of them are emerging as chatbots and other services that we're starting to see. And there are definitely early examples of technology that have been deployed as new offerings. But the full pivot, where a company now declares that I am in the center of my business, building my product, selling my product, servicing my product, engaging with my customers based on primarily an AI architecture, that is still work to be done. And so I think, at this point, we're still right now in most large enterprises in the first proof of concepts, the first prototypes. But one of the things that's different about AI is it does not take 3 years to build one of those. You can go from idea based on the tool chains available to having something in production that you can start to really do. And we're doing that inside of Dell, make your developers more productive in a matter of months. And so the velocity of this cycle is something that we've never seen before, which means the gap between getting your feet on the ground and being in production and transforming your enterprise is not a 10-year cycle.
Hey, John, I keep hearing, you've said it, and I've had other guests, but when they talk about AI and inference, right? Am I saying it correctly? Yeah,
inference, yeah.
Right. How is that different from AI training? And is that kind of a new concept, or is that just something more complicated when it comes to generative AI?
No, they're part of the same cycle. The idea behind AI is look, you're trying to have a machine do some kind of cognitive work, answer a service call, sell something, write code. In order to do that, the first step is that you must have that machine have some access to the knowledge necessary to do that, which is what training is about. The difference in large language models is that we've developed techniques that allow us to, instead of trying to, as human beings, decide how to code, we've learned that if you just expose these new techniques, these new technologies, large language models, to a gigantic set of coding, just examples of coding, they will classify them, organize them, create a neural network, and interestingly enough, they will then be able to replicate that intelligence, that behavior. And so the training phase is about taking gobs of data. In the current phase, it's the entire internet, and run it into these models that create systems that can understand or communicate human language, that can code. And all that is them deriving from a gigantic data set the knowledge that's contained within it to create a set of skills. That's training. Inference is totally different. Inference is once you have that model, now you want to do something with it. You have a thing that can code, great. Well, inference is when you tell it to code a program, to actually produce source code that does something.
Right.
And so they're just two halves of the same coin. One is the learning to create the capability. The other is the act of using the capability in production.
Hey, listen, something I got to ask you. It's a story that's on the Bloomberg, and this has to do with Nobel laureate. He's also an economics professor. We're talking about Paul Romer, and he was talking with our team here, and he said runaway confidence in artificial intelligence risks repeating the mistakes of the crypto hype bubble of only 2 years ago. He says right now there's way too much confidence about the future trajectory of AI. When people project this forward, I think they're at risk of making a very serious mistake. Do you think that there's too much confidence about AI? Do you think there's too much euphoria?
Yeah, two answers to that. In the general population, I think it's a very confusing space because we have basically the human race is maybe susceptible to science fiction, and we think that what we're producing is artificial general intelligence. And we're producing these sentient beings. These are not sentient beings. These are technologies that do stuff. Yeah, maybe sometime. We all believe there's a path to AGI. It's just not in the near term. That whole dialogue in the, let's call it the consumer general market, which is primarily where most of the big public AI players play, is a risk because people think these have personality. They don't understand the technology. When you come to the enterprise world, it is far more conservative. There is no enterprise in the world that's trying to build the Terminator or a sentient being. What we are doing is we're applying the techniques that were pioneered in the public AI world and large language model space to very specific problems within a corporation that could benefit from it. Right. Writing code, finding your customers, engaging to solve problems. Those are the things that are mattering. So enterprise is kind of boring, to be perfectly honest, versus what is in the art of the possible in the public world. However, as you know, our industrial complex is quite large and the impact is much bigger.
Great stuff. Already looking forward to the next time we get to catch up. John, thank you so much. Be well. John Rose, he's Global Chief Technology Officer at Dell Technologies, joining us from New Hampshire. You are listening and watching Bloomberg Business Week. Carol Massar, along with Tim Stenovec, and this is Bloomberg.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
Well, Carol, if you've seen, heard, or even uttered the word vibe session, then you can thank our next guest.
Yes.
Okay? Because she's the one who coined it. She's a former associate at Capital Group. She's now a TikTok star. She's a financial educator and commentator. She's a blogger. She's a Bloomberg opinion contributor. And she's the author of a new book. It's out now. It's called In This Economy, How Money and Markets Really Work. We got with us Kyla Scanlon. Kyla, welcome. How are you?
Oh, I'm good. Thanks for having me.
Congratulations on the book.
Thank you.
People are putting out books about the economy quite a bit. They're trying to answer a lot of the questions that people have, trying to explain this stuff. You take a different approach. What was the white space that you saw when you were sort of putting this all together?
Yeah, I mean, the book is largely inspired from the content that I do, which is meant to be like fun and accessible. And so the book has 60 illustrations. The language is also accessible. And so I just really wanted to write a foundational guide to the economy that was fun. And so that's what the book is meant to be.
Fun but smart, because these are important issues, right?
Right. Yeah. It talks about inflation, the labor market, GDP, all of those things. And so it's meant to talk about the important issues in a way that doesn't feel overbearing or complicated.
Well, what's your interaction like? I feel like I have a bunch of nieces that are probably in their 20s, like early 30s and stuff. And there are ones that are very accomplished too. And they'll be like, when it comes to money and all this stuff, like people feel lost. Why do you think so?
Oh, I mean, I think we do a disservice to people in terms of how we give them information about the economy.
Yeah.
I think it just can feel very convoluted, very complex. And I think oftentimes it's hard to get the right information that you need trade. And the economy is such a personal experience too. So a lot of people are like, I'd just rather avoid that than think about it. But I think if you give them the tools, like they'll know how to dig a hole or whatever. And so I think it's just overwhelming. And but if you distill things down in an accessible way, it'll make it a little less overwhelming.
All right, so how do you approach something like this? Because there's some really serious stuff in here, including monetary policy. So think, like, how did you kind of initially think about how you wanted to get into it?
Yeah, well, so I rewrote the book 3 times. So
that's fair.
There was
a writer, that happens, right?
Yeah, no, it was a grind. But I like the whole idea was to use the illustrations as kind of a backbone of the book. And like, if you buy the audiobook,
we're such a visual society, right?
Yeah.
Especially today.
Oh yeah, and if you buy the audiobook, there's a PDF. But yeah, the book starts with the economic kingdom, which is kind of like the tapestry of the economy, showing how everything is interconnected. Because I think that's like the most confusing part is like, how do all these, like, what is the Fed and what is monetary policy?
Why do I care, right?
Right, and how does that interact? So everything kind of stems from that first drawing, and then the rest of the book is sort of an exploration of all of those topics with like little jokes interspersed. And so yeah, it's meant to be fun.
I love that you go to the Federal Reserve, because I do feel like if you bring it up in certain circles, they're like, yeah, whatever. But you talk about interest rates, right? And then everybody like comes alive.
Yeah, I think that people don't, like, it's not anybody's fault. Like, economics education is not that accessible, to use that word quite a bit, but I think that like, you just have to talk about these things. And, you know, I think part of the reason, you know, to go to the vibe session topic, part of the reason that people freak out is like, I live in a system that I don't understand, or I feel like I don't have the tools to understand. And that's, the Fed is really important to at least have a grasp on.
Can you talk a little bit about how you got into it? Because you were an associate at Capital Group earlier in your career. You also sold cars at one point.
Yeah.
But talk a little bit about, you know, your education and then how you got into this.
Yeah. So I grew up in Kentucky, and I didn't even know you could major in economics until I got to college. And so for me, it was just kind of like, okay, there needs to be some sort of tool out there that people can access, like me when I was that age, that you can understand the world around you. And then when I was in college, I had a whole blog on like options trading. And so I've always wanted to bring people alongside a learning journey. And now it's really about the economy. And just...
You didn't go to Wall Street.
Well, I guess Capital Group is like the buy side.
But you didn't stay there. I mean, your career could have been like, you could have been like a terminal subscriber, like, you know.
I was at one point.
But you were, exactly.
Yeah. Exactly. So why didn't you stay with it?
So I graduated into the pandemic, and it was kind of like, it's a personal journey, right? But like, for me, I was like, my life, I think, is about economics education. Like, I really weirdly care about this so deeply, and I just wanted to bring people up to speed with the knowledge that I felt was important for them to get access to.
It's so interesting. I'm thinking when we're having this conversation, because it's also a time, you know, with politics a little crazy, is that people are saying we need civic lessons again to really kind of understand how government works. But I also agree the same thing. Like, you're right, we're taught algebra, calculus, and all these different things, but really understanding how money works and flows and how the economy. I studied economics too, and it was because I was interested in like understanding how this all works. And it really gives you such a great understanding of your own picture, but just more broadly how it all plays together.
Yeah, I mean, I think it's super important. And like I said, I think if you don't understand it, it can be just really overwhelming. And so, yeah, that's the goal of the book.
So what is the economic kingdom?
The economic kingdom is
Start with that picture.
Yeah, it's all the castles. And so it's maybe like a little reductive of an image of the economy. You could probably spend several pages on it. But it's just meant to show the interconnectivity between everything. So there's a Federal Reserve castle, or a monetary policy castle, like firing a cannon into inflation, meant to represent rate hikes. And yeah, it's just like, I do think that economics is so fun. And whenever I say that to my friends, they're like, please get away from us. But I do think like it can be really fun and interesting. And it doesn't have to be so big. And it can have knowledge about it that is digestible.
Well, we're seeing the effects of it play out right now with the difference in the way that people feel versus what the economy is telling us about historically low unemployment, a stock market that is at records, but people just don't feel good about inflation. People don't feel good about their situation in poll after poll. At the end of the day, it's about vibes, you argue. So talk a little bit about vibes and the importance of vibes when it comes to thinking about the economy.
Yeah, and to caveat all the vibe discussion, like structural affordability is a massive issue. Like we have a housing crisis, healthcare, like childcare is up like 32% since 2019. Elder care is $10,000 a month, and so that's not meant to reduce the conversation about the issues that we're facing as a society that has an economy. But the polls are hard. But like there was a poll that was released that said that 55% of people think that we're in a recession, 49% of people think the stock market is down.
Yeah, I think this was a Harris poll last week.
Yeah. Harris Guardian, 49% think unemployment is at a record high, and it's like the opposite. Stock market's up 12%. We're not in a recession. Unemployment's at a record low. And so I think it really is like, yes, we can acknowledge that the economy is tough, and there are parts of it that are tough, but you also have to acknowledge an element of reality. And I think that's where this vibes conversation is really important. How people feel about the economy really, really matters.
Well, sentiment matters, right? We see it certainly in the financial markets. When you talk with individuals and when you were thinking about this book, like what is the number one thing that people just kind of miss in kind of understanding how the economy works?
I mean, I think it's their importance within it. Like everything that we do is an economic transaction. Like I bought a cup of coffee this morning. That's an economic transaction. Right. I took the subway here, economic transaction. And so I think people oftentimes will reduce their own importance in this big thing that we're all a part of.
You've got an entire chapter on here about housing and the American dream. We just had a story about this. It's one of the most read on the Bloomberg terminal about how that American dream is slipping away. Yeah. What are your thoughts around owning versus renting right now?
Yeah, I think it's a really tough discussion. I think that it's really a wealth building discussion. So there's a chart from the Federal Reserve, the distribution of financial assets, that shows that the bottom 50% have all of their wealth tied into their home. The top 10% have stock in like business ownership. And so I think the way that we think about housing probably has to change. It's a speculative investment that we live in, and it has to probably be one of the two. It can't probably be both. And so I think that's kind of the conversation that we have to have around housing, but that's an extremely hard conversation.
In terms of the chapters, is there one that was like the trickiest for you, or that you were like really stewed over, or didn't just rewrite it 3 times, but maybe even more?
Yeah, I mean, the problems chapter was hard because like you don't want to come off as really negative, and you also want to provide solutions to it's very easy to like sit and talk and be like, oh, things are bad, but it's much harder to provide proper solutions. Yeah. And so I think it was hard to discuss the problems that we're facing because there are so many, but then the opportunities chapter was so much fun to write because there are ways to fix the issues we're facing.
I'm wondering if you have the Substack, you have YouTube, you have TikTok, you have Instagram, you have Twitter/X/ whatever it's called right now. How did you get a book deal?
Yeah, no, that's a good question. So I wrote this piece back in July 2022 about the Vibe session, and I didn't really think it would be any different than any of my other newsletter pieces, but then the New York Times was like, the opinion section was like, would you want to publish with us? And I was like, yeah. And then Penguin Random House reached out and they were like, have you ever thought about writing a book? And I wrote books all throughout my childhood. Like my first book was when I was 8 about a penguin. And so I was like, yes, of course I want to write a book.
Was that when Penguin Random House published also?
I wish, perfect, right? It was very, I'm not like super woo-woo, but I was like, that's pretty woo-woo.
Totally.
Yeah. And so that was how the book deal came about. And then I really wanted to provide a static information guide rather than social media videos.
What if a younger generation doesn't get it right, or people in general don't get it right and understand their role in the economy, there's a cost.
Yeah, totally. I mean, I think there's a cost to like how we interact with one another, like the polarization. I think some of the polls are super disparaging and concerning. And then I think also like if you don't understand the economy, I don't think you understand the potential that you might have.
Right.
Like you kind of get stuck in certain places. What
do you mean by that? Carry that out for me.
Yeah, I mean, I think it's just like if you don't understand like the power that you might have to move jobs, like the strength of the labor market relative to like quits and jolts, et cetera, right. That could hold you back. So I think that's a big part of it. I think not understanding that inflation going down doesn't mean that prices are going down, right? The strength of the economy, and I think like mortgage rates are super important to understand, like why they're going up, when it's a good time to buy a home, et cetera.
What do you think though, in terms of like we were talking about with mortgage rates and people think it's too high, it's too expensive, can't do the American dream. Having said that, historically they're still kind of low.
Yeah. Well,
so how should we be thinking about that, or how do we teach about that?
Well, I think it's like relative, right? Like right now they're really high relative to where they've been.
but the zero or the barely was the abnormal part, right?
Yeah. But you get used to the abnormal part, right? You get used to it.
Yeah,
and I think like we got very used to
true.
easy money. You see it with like the startup industry right now. They're really flailing around because money is very, very expensive. Right. And I think also like homes didn't used to be the place to go to make a bunch of money. Like I think it's from 1860 to 1960, they only grew by like 0.06%.
Yeah.
And now we really expect homes to do a lot of work in terms of building wealth. And so I think it's just all relative, and relative to where we've been, we're in a weird spot, but we're always in a weird spot.
Yeah, and we do have these weird 30-year mortgage products here in the U.S. that are like, you know, kind of unique to us. Yeah. Also, the housing market, we could do an entire show just so about the housing market. Yeah. I want to shift gears a little bit because I think a lot of people know you from your TikTok videos, especially post-Federal Reserve days, where you've been known to portray a one Jerome Powell on TikTok, and they're great. People love them. I love them. Have you heard from Jay Powell?
No, not directly.
Not directly.
Yeah,
okay, what do you mean by not directly?
Well, so I've had the opportunity to interview Mary Daly, who's the president and CEO of the San Francisco Fed, and she hasn't like said that anything about Jerome Powell, like knowing about the videos, but I know her, and that's like, you know, second degree, and she's great. I really enjoy interviewing her.
She hasn't said, hey, Jay, kind of like
He does. So he's on the terminal. So you can, you know, and you're a Bloomberg opinion contributor, so you can always.
If he wants to say hi, I'd love to chat.
But not yet. No Jay Powell yet. No. Who knows? Maybe when he writes his memoir, you know, you'll make an appearance. Who knows?
You do write about problems. What did you want to do with that?
Why I wrote about problems? Yeah. I mean, I think the big thing with the problem section is to address, I think it's really important to like recognize, like you should feel the way that you do, and like there is validity to the feelings that you're having about like social media, the algorithms, the loneliness crisis, mental health, etc. Like you have to talk about problems, but then you also have to talk about solutions. And so that's why I paired, you know, problems and opportunities together, because I think it's doing a disservice to not talk about the issues that we're facing.
So talk about the social media side of this, because you do have a section in the chapter on problems just about social media making it worse. One challenge with that in your life, I would imagine, is that you have to be on social media and you have to be very visible because that's how you build your brand. That's how you build your business. What's been your experience with social?
I mean, it's been great. Like, I don't think I'd be in this room without social media. So, like, I have to congratulate it for that. But then I think the way that I think about social media is that a lot of bad things do come from it. And that's why you have to create good things on social media to counteract the bad things. And so that's why I'm on social media and I do social media videos, is because that's where people go for news. That's where people get their information. And so you have to be where people are, especially if you want to educate them about the economy. And so that's how I think about social media.
How do you think that it kind of plays out eventually, that we, social media, in terms of acknowledging that my data, your data, Tim's data is really valuable? It's what makes them tick, and it's what's made them into the largest market cap companies out there. Like, how does that play out eventually? Like, do we get recognition at some point for all? No, seriously.
No,
right?
I think you're right. I mean, there's been a lot of conversations about like getting paid for the data usage. I mean, I think it's kind of absurd that they're able to like sell it and benefit so bigly from that, and then you don't really have a say in where it goes and what you're being sold on. And I think that
or just sold more stuff and like bombarded more stuff to get more data.
And I think that's the issue, is that people are very tired of being constantly sold to. Like, everything is an advertisement, the attention economy, like your eyeballs are commodities. And I think that creates a lot of exhaustion under the surface.
I'm wondering about economic decisions that you kind of make every day now that you didn't make before you wrote this book. Like, how has looking into this stuff changed your own behavior?
Oh, I mean, I think that for me, I've always been sort of aware of what's going on. Yeah. But I think now I pay attention to what people are saying a little bit more in terms of the book, like what they're thinking about inflation. Because I think that you have to, I used to be very data driven, and I used to be like, inflation is going down and you should feel better. But now I'm much more likely to weigh opinion versus data. And I've, because I've been, there's a lot of good papers on scrutinizing the data. Like, is the data actually representative? And of course, data is a tapestry, right? Like, we look at a lot of data points to figure out what's going on. But I think that it just deserves a little bit closer looking too.
No, you do think about, sentiment, how important it is. But I do also wonder, we're a data-driven company, and there are data points that do tell what is going on, right? So there's that balance of, same thing like I always feel like in journalism, you can always find the data points to tell any story.
Sure.
But there is also truth and information, right?
Yeah.
That's actually a representative of what's happening.
Yeah, and I think that's why the Harris Guardian poll was so disheartening to see.
Yeah.
And you have to take polls with a grain of salt. But like to see that people think that the stock market is going down when it's just objectively not, like that's really important to understand. And like that's where reality is. You can't have an opinion on things that are objectively true, and I think that's where that conversation gets really hairy. Yeah,
you can debate the valuation and maybe say it's not right,
sure.
but the move is the move, right?
Right.
It's just kind of this wacky time. Really cool book. Like I said, I feel like I have a million people in my life that I want to give this to because I think it's a really useful book in terms of understanding a lot of stuff. Yeah. Congratulations!
Thank you so much.
Good stuff.
Kyla Scanlon is the author of In This Economy, How Money and Markets Really Work. The book out today. She's a TikTok star and a contributor to Bloomberg Opinion, as well as a financial educator, and so much more.
You're listening to the Bloomberg Business Week podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Plenty ahead in our second hour of the weekend edition of Bloomberg Business Week, including lessons from former CEO and co-founder of Whole Foods Market, John Mackey, on conscious capitalism and whether selling out to Amazon, was it a good idea?
Plus, legendary guitarist and founding member of the Guess Who and Bachman Turner Overdrive, Randy Bachman, on taking care of business by auctioning off over 200 of his guitars.
I believe you have to say, taking care of business.
I was trying to,
every
but
day.
I don't know if we have the rights to that.
I think I kept it within a limited amount.
Actually, you
and
know
you
what?
can all say thank you that I didn't sing longer.
I don't think any court or jury would confuse that iteration of it.
There might be some
as
people
being anywhere close to the original.
Some people might be upset by my
creative expression.
Singing, though. That's my point. Oh, okay. All right. Also, this summer, it's all about brightly colored gemstones, courtesy of Bloomberg Pursuits.
First up, he changed how we think about groceries. John Mackey co-founded Whole Foods Market 40 years ago, staying on until 2022, years after selling to Amazon.
John also co-authored the New York Times bestseller Conscious Capitalism. His new book, The Whole Story, Adventures in Love, Life, and Capitalism. He began our chat at the beginning of Whole Foods, founded with his then-girlfriend, Renee Lawson.
By the time it opened, I was 25, Renee was 21. So I didn't have a business background, neither did she. But we were very young and idealistic and energetic. And the first store was actually called Saferway back in 1978. It was a vegetarian store. And we just wanted to sell healthy food to people, earn a living, and have some fun. In a lot of ways, that continued all through Whole Foods Market's destiny. We didn't have big growth plans. That kind of came along after we relocated that first store, which was in an old Victorian house on a non-commercial street. It was not a great place for a store, but the first real Whole Foods Market, when we also merged with another small natural food store that were our friends, and together we changed the brand to Whole Foods Market. Fantastic location, and the store just took off. And then we had a terrible flood. We knew we built in the 100-year flood zone.
Yeah.
But we had a 100-year flood in the first year. And it had been 70 years since there had been a flood like that in Austin. So that caused us to need to get a second store. And then that was successful too, and then a third store. And then I suppose we really started thinking bigger back in 1989 when we opened our first store in California. We were California dreaming, and we opened one in the Bay Area, in Palo Alto, California. That took off, and it's kind of like, wow, maybe we could even be a national company. So it's just it changed a lot, but it wasn't like we were MBA students that had done this market research and decided we were going to build this national company. We were just young kids, kind of having fun and
for lack of a better term, it was much more organic than that.
Very, very good, Tim. You got it.
Thank you.
Hey, would you have liked anything to have gone differently? Like if you could change things?
You know, a question I get asked a lot by media is something like, if you could go back and tell your younger self, what would you want to tell your younger self? And I kind of have three jokes that go along with it. The first joke is, it wouldn't matter, he wouldn't have listened to me. And the second joke is, I would have told him not to get involved with that woman. and the third one is the truth. I don't think I would tell him anything because, I mean, not that I didn't make any mistakes. I made a ton of mistakes, and I could have saved that younger self from making mistakes, but then I wouldn't have learned the lessons I needed to learn.
Yeah.
And it all turned out so well, right? So
even the sale to Amazon,
I think so.
Good with it.
People ask me if I have regrets. Do you regret selling to Amazon? And the answer is no. I regret the circumstances that made that the best alternative for us. It was the best alternative. If I could go back to that time, I'd make the same exact decision. And the deal has worked out pretty well for Whole Foods. I mean, people don't realize that Amazon let us drop our prices. We needed to lower our prices to combat the whole paycheck narrative. And they helped us. We couldn't have done that on our own as a public company. Not easily. It would have been, the markets wouldn't have tolerated the short-term sell-off in the stock. But we dropped it 4 times in the first 2 years under Amazon. They took the long-term view. And then they also raised the pay of everybody in our company in the first 6 months. They made, they went in with a $15 minimum wage, and everybody else had to go up from there. So Amazon, and then when COVID hit, I mean, how could Whole Foods have possibly done all that delivery? Amazon is technology. So Amazon was a great partner for Whole Foods.
It's been a couple of years since you retired as CEO, and I'm wondering if today you can walk into a Whole Foods and just buy something.
A couple of points. The first one is, if you're an entrepreneur and you create a business, it's a little bit like you're a parent and you have a child. Your child grows up, and you can guide that child, but the child's not you, and the child's going to make some choices you don't agree with, and that's okay. You still love your child. So is Whole Foods doing exactly everything I would if I was still CEO? And the answer is, of course not. But one of the gifts that I gave to my successor, Jason Beekle, who is the one I wanted, I picked Jason, and one of my gifts to him was not to be hovering and watching and second-guessing him. Just, as I have a mantra now, it's not my problem any longer. And that's a gift to Jason, because then people aren't coming to me complaining about stuff. They know I'm not going to listen to them.
Conscious capitalism. You co-founded that movement, and simply put, it's right. We're thinking about business benefiting everybody, multiple stakeholders. Many would argue, we talk about it in the business environment too, right? A lot of investors saying, got to think about multiple stakeholders. The Business Roundtable talks about it. So, I feel like we talk a lot, John, about the wealthier individuals at a company are doing really, really well, and it's not necessarily trickling down. Has conscious capitalism, I'm curious how that has evolved in thought for you, if it still holds.
I mean, conscious capitalism's now, I feel like it's being attacked on 2 fronts. It's being attacked. The traditional capitalists are attacking it because they're concerned. They don't want the owners to lose control of the business, and rightly so. The owners and the investors get paid last after all the other stakeholders are paid. But then we'll say on the left, the anti-capitalist, they're trying to weaponize it in order to take power from traditional capitalism. And it's like, no, conscious capitalism is not an economic system. It's a management philosophy. It just really has some very basic principles. First principle is that every business has this potential for higher purpose besides only making money. I mean, my body produces red blood cells. If I just stop producing them, I'm going to die. But that's not my purpose in life, to produce red blood cells. Business must make money or it will die. But that's not exactly why it exists. Why does it exist? To create value for its customers. That's why it exists. Doctors heal people, teachers educate, architects design things, engineers construct things for customers. So does business. And so it has this higher purpose, and it should articulate that higher purpose that unifies stakeholders together.
Well, then do you think there's enough of conscious capitalism going on in society? There's capitalism going on, but do you think there's enough of conscious capitalism going on?
I would like there to be, first of all, there's a lot of what I call unconscious conscious capitalists. They don't know that they're conscious capitalism, but the second key principle are that the stakeholders are interdependent. That doesn't mean all stakeholders are equal. No. I mean, the customers are obviously the most important stakeholder. That's why the business exists. And who's second most important? Well, probably the investors are. And then probably the team members are third after that. Then you have suppliers. Then you have the communities that we're all part of. They're all important. They're all interdependent. And a conscious business is going to take care of all of them, recognizing
but there's a ranking.
There is a hierarchy, and there should be. Business is not, people judge business because it doesn't act altruistically all the time. And it's like, what part of our society does? It's human nature to be both self-interested and looking out for yourself and looking out for your families first, and then, but also generous and caring and compassionate. We're both. We're complex beings. This bifurcating people, and they're either all completely altruist or they're completely selfish and greedy bastards. That's just wrong. That's not the way human nature is. And business isn't that way, but no other part of our society is either.
You talk about this in your book, and you learned a tough lesson. I think it was back in 2009 when you were hiking on a trail and you found that the Wall Street Journal had published editorial that you had written. They called it the Whole Foods Alternative to Obamacare, 8 things we can do to improve healthcare without adding to the deficit.
Yeah.
And it got you in some hot water at the time. People were boycotting your stores.
Yeah.
My question for you is not about that. It's about, what do you think you can say now that you are no longer CEO of Whole Foods that you weren't able to say during your entire career because you were worried about people boycotting stores or people coming after you?
It's a great question. And my big learning from that experience is that people do not separate the CEO from the company, or at least the founder or the entrepreneur of the company. I thought, look, it's America, free speech. I'm expressing my personal views. But no one saw it that way. They saw this was Whole Foods views, and so there were boycotts and there were boycotts and there was hundreds of letters coming into maybe even thousands of letters and emails coming into our board demanding I be fired. So I kicked a hornet's nest, and it's like, so I went away from that realizing, okay, I get it. I don't want to hurt my child. So I'm not going to speak up. The board actually instructed me, never ever again write an op-ed piece that we haven't signed off and approved. So what could I say today? I could say anything I want to say, except I'm a place in my life where I've concluded that political talk just gets people so riled up today. We're like these two big tribes that hate each other, and people are constantly trying to sort you out. Which tribe are you in? Because do I love you or do I hate you? And it's like, I'm kind of not in either one of those tribes, because I believe in capitalism. I believe in personal liberty and freedom of speech and freedom of thought, and I don't fit into the two big tribal boxes. So I can now speak about politics, only I've more or less decided I don't want to.
But isn't it interesting coming off the pandemic and George Floyd, the killing of George Floyd, where we did see CEOs come out and take positions? And I feel like employees wanted their CEOs and leaders to take positions, and we talked about the importance of it. So what is the balance for a leader who is running a company, and maybe there are some really important issues out there where they should take a stand?
Here's what I did at Whole Foods during that period of time, and this is what I'd actually recommend for other CEOs to do as well. First of all, if an issue is directly related to the purpose of your business, you should take a stand. Whole Foods took stands on animal welfare, seafood sustainability, things that direct organic agriculture or regenerative agriculture. These are things that are directly important to our purpose and why we exist. So I think definitely those are things appropriate to speak up on. But then it's like all the social justice stuff, that's not really Whole Foods Markets. We can't solve all the problems in the world. We're a mission-driven business, and we have to focus on our business. So I remember telling team members that were wanting me to speak up on these issues, and I said, listen, I believe in freedom of speech. So whatever you want to do when you're not at work at Whole Foods, you should do that. You want to advocate for certain political changes, you should do it. But while you're working for our company, we want you to focus on the purpose for why we exist, and we're here to nourish people and the planet. We're here, and so that's a big cause, to help people be healthier, eat healthier food. Work on that on our time, and then do whatever you want on your time. And because I can't separate myself, as I told you from the 2009 thing, there's no way I'm going to come out and take these political stands.
Right.
I can't even. My board wouldn't let me do it anyway. We got kicked really hard on that one. I'm never going to do it again.
I understand that idea of sort of staying in your lane when you're a business. But I also think that in this day and age, there are issues that can affect a business, even if you don't think they will. We were just talking about affordable housing earlier, and the fact that the majority of New Yorkers don't earn enough to live in New York City at a rate that would be deemed, affordable, 30% of your salary. So what happens to a business if it can't find employees because the people can't live in that area where the business is?
I did a whole piece when you guys opened in Detroit. Like, it was a big deal to go into that area.
First of all, I really empathize with that position, because I know when I was CEO of Whole Foods that most of our team members that work in our Manhattan stores don't live in Manhattan, right? They're living in the Bronx or Queens or Brooklyn or some other place. So I am empathetic to that. However, I have a different, I'm going to speak up on politics really briefly. I mean, the reason we don't have enough affordable housing is because we've regulated it out of existence. And people ask me what to do about this problem. I say we ought to create, just like some countries create enterprise zones where the rules don't apply. There'd be if a city like New York would set aside in places in Manhattan that would be sort of free building zones where they wouldn't have any taxes for housing. Affordable housing would not be taxed. There'd be no real estate taxes. You'd have different sets of regulations, say on the disability acts. You go to Europe and you don't have all of the, you don't have to put an elevator in everywhere and these areas, I'm not saying those regulations aren't good, but I'm saying if we want to have more affordable housing, that really drives the cost of housing up. And thirdly, manufactured housing is the way to do it, to make affordable housing. If you look at where most poor people in America live, they live in mobile homes. They live in manufactured housing, which is far more affordable. That's not really legal inside many cities. But if we allowed manufactured housing to come in and deregulate some of these areas, you would find Manhattan could have plenty of affordable housing.
Interesting. We have 45 seconds left. Your book is called The Whole Story. There's so much more in there, and I wish we had more time. I don't know. Why do you want people to read this book?
This book is, first of all, it reads like a novel. It's fun. It's full of joy. It's full of love. I mean, the things that I talk about in the book are creativity, entrepreneurship, and love. And this traces my own personal growth, both emotionally, psychologically, as a leader, and spiritually. It's a fun read. I really think people read it, they're going to like it.
I hope you can come back because you obviously have lots to say and it's really engaging and fun. So good luck with it. And maybe
you.
when it comes
Thanks,
out in
girl.
paperback, we have you come back. John Mackey, he's co-founder of Whole Foods Market, joining us here in studio. His latest book, his new book, is entitled The Whole Story, Adventures in Love, Life, and Capitalism. So joining us here in our studio.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
Released in 1970, covered many times over since, just one of the many songs from the talented guitarist, songwriter, and performer, rock star Randy Bachman, who founded two rock bands, the Guess Who and Bachman Turner Overdrive, writing hits such as American Woman, Let It Ride, You Ain't Seen Nothing Yet, and, of course, Taking Care of Business.
And this past week, he auctioned off over 200 of his guitars, some of which he used to perform some of those iconic songs. It all went down at the Julien's Auctions Music Icons sale at the Hard Rock Cafe here in New York City.
And Tim, we got a glimpse into his rock and roll lifestyle and why he decided to auction off many of his iconic guitars. Here's Randy Bachman joining us in studio about life on the road.
When the gig is done and the thousands of screaming, you're in a car with a bunch of guys where you've been on the road for 2 months and you don't really like each other anymore, and everyone else is going home with their loved one to a snugly home bed and the kids with a babysitter and the fireplace burning, and you're all alone on the damn road for 30, 60, 90 days. And that's the flip side. The other side is wonderful. It's your teenage dream. You want to be like Jimi Hendrix or the Beatles or Lady Gaga or whatever you want to be. You go and be that because you have this little talent that you've been given as a kid, and it's really amazing when you get to do what you want and make a living at it. That's the good side of it.
And be really successful at it.
But the travel is killer.
What was the point for you that it sort of shifted from living out that teenage dream to feeling like, okay, I want to be home in my own bed?
It happens every tour. It happens daily.
But did it happen earlier?
Teenage dream now. I'm here on this great thing. I'm plugging my guitar sale.
But look, to be fair, you're traveling a ton still.
And you're going to go touring.
When you get home, you get anxious to go on the road. When you get on the road, you get anxious to go home. If you ask an actor, do you like movies or stage? They say yes. You like one or the other at each time, and you got to do kind of both to be fully rounded. You can't make a living in this business. I can't be an athlete and play a home game all the time. You got to go away. So all these glamorous gigs where guys are getting hundreds of millions of dollars to play baseball, there's a downside, but the upside's big.
No, we feel that sometimes, right? We love travel, we love our jobs, but, you know, it's nice to be home, and we love that. We're going to talk about the auction in a moment, but I want to ask you, in researching, we came across that Elvis Presley's motto, taking care of business, was inspired by your band's song. Have you heard this?
Yes, I was a big fan of Elvis. I played classical violin from the age of 5 to 14, and I got tired of playing classical music. I auditioned for the Winnipeg School Junior Symphony and flunked. Quit playing, went home, said to my mom, that's it, I quit, I can't play. I'm never playing the violin again. The next day I saw Elvis on television. Yeah. I said, what is that? Oh, it's called rock and roll, that's called the guitar, and that's called Elvis. All you play on violin is melody, you're playing the top line. So my cousins had a guitar, I got their guitar, I could play everything because I was playing violin by ear. Yeah. Even classical music, my teacher would play it first, Tchaikovsky or Chopin, and I would play it. So I started playing lead guitar, boom, and then I'm in the Guess Who, and then here I am, because of Elvis. A few years ago, after he passed away, Priscilla was doing an HBO special in Graceland. She said, oh yeah, we were driving to the LA airport to fly back to Memphis, and Elvis heard a song on the radio by a Canadian band, taking care of business. He went, boom, I want that TCB lightning bolt right away, bada bing, bada boom. And that became his motto for his band. It's on his tombstone. Mm-hmm. Nobody else can use that. I wrote the song. I can use taking care of business. He can use it, and
that's pretty cool.
I have a buddy who's waiting somewhere for me to show up.
Incredible.
We'll do singing, taking care of business together.
Okay, not too soon. Okay.
No.
That's pretty cool.
The auction is something we want to talk about.
Yes.
Yeah,
200 guitars.
Yeah, and I still have a couple hundred.
That's
left.
what we were going to ask.
Wanted to know.
This isn't all of your guitars?
How many pairs of shoes do you have in your closet?
A lot.
You don't know. I don't know how many guitars I have.
I don't even tell my husband. No, it's interesting. My husband also plays guitar. Not, but a lot of fun. But it's like you can never have enough guitars.
Right.
What is that?
How many shoes do you have?
Can never. All right, done.
You know what? It's
done. You don't
done.
even have to justify. Okay. So why are you selling even some of them?
When you travel, I want to be like Chuck Berry or a lot of these other guys. You have a home in London, a home in LA, so you don't have to, we're sick of motels. Yeah. You'll drive 300 or 400 nights to sleep in your own bed for a couple of hours. Yeah. So I had a home in London, Covent Garden, Santa Monica, Toronto, outside of Toronto, Oakville, and Victoria. Can't go to them. Shut down for 3 or 4 years. You can't go to your home. You sell everything, ship it to me. You end up with 4 lawnmowers, 4 toasters, hundreds of knives and forks, and hundreds of guitars all coming to your house. You got to rent a storage space, and you can't see them. They're all in a storage, so you got to open a door and go in and look at your stuff in storage. So it was time to sell it.
These guitars, though, each one of them has a story.
A lot of these do. A lot of them, my American Woman 1959 Les Paul is a rare guitar to begin with. They only made a couple hundred each year. Pretty and cool. The 58, 59, 60 are very rare because they were the last time they made them with a certain glue that when they put the neck and the body, that glue permeated the wood in the pores and then petrified. Wow. The guitar has this brang and it's very heavy. Guitar weighs 15 pounds. You can imagine that on your shoulder for 4 hours every day. You end up doing this all the time. It's just dynamic tension. Your muscles do that. And I had to get a lighter guitar. But I played that one sitting down. Mm-hmm. But it's the sound of American Woman. If you hear that,
could you imagine?
And no time, all the Guess Who hits, and a lot of BTO guitar solos were that guitar. I just didn't play it on stage. It was too heavy to stand up. So then I started to play Fender Stratocaster. So the 2 white Strats I used with BTO are there. They're #1 guitars. They played on You Ain't Seen Nothing Yet, Let It Ride. My Les Paul was American Woman, No Time. So these are iconic guitars that have played on #1 singles and then all the albums on both sides of it. So I'm hoping they get a good home because sooner or later you leave home or your kids leave home. Mm-hmm. My kids are leaving home.
They don't necessarily want all this stuff,
and I hope
right?
somebody adopts them. Yeah. And the American Woman guitar is bought by Slash or Lenny Kravitz, who would deserve it. And it has another hit. It plays another
Has anybody reached out to you about
There's a magic in these guitars.
Yeah.
We just picked them up. They were traveling with us all day playing them. And when you plug it in and play it, you've heard the sound before. Even though it's strange to you, you've heard it on the radio so many times. Right. Even the rhythm to Let It Ride and things like that. There's a ka-ching when you hear it.
When you play it again, is there any part of you that's like, maybe I don't want to let it go?
Yeah. They were handing it to me one at a time last night. We did a little showcase, and I go, gee, I don't want to sell this, but I haven't played it for 11 years. I'll probably never play it for another 11 years. It's time for it to get a new. It's time for somebody to play them. You know,
that's what you want. Rather that than they're sitting in their cases, right?
Yeah,
in a storage room or in your house.
The legal lawyer's library. Yeah. They don't go to the books anymore. It's all on the computer. It's just like the guitars. You can't get to the guitars. They're all in storage.
Unbelievable. Having said that, you need to share with our audience about the lost guitar. Tell us about that.
It's one guitar that will not be auctioned off.
No, I just got it back after being gone 47, 48 years.
Oh my God.
It was stolen from a hotel in Toronto. I was doing a BTO album there. It vanished. There was no internet then, so I had to fax all the guitar stores. I ended up in a frenzy buying Gretsch guitars. I went through my midlife crisis buying Gretsch guitars. I amassed over 300 and finally sold them to Fred Gretsch. It became the Gretsch Museum in Savannah, Georgia.
Wow. Unbelievable.
But this one that was stolen, I kept searching for, and we got a notice back a couple of years ago. Tal and I, my son, were doing Bachman Trainwreck every Friday night on YouTube because there were no gigs. And a guy said, I found your Gretsch guitar. It was in Tokyo with a guy named Takeshi, who was like the Brian Setzer of playing rockabilly on this big orange Gretsch.
Yeah.
And my daughter-in-law is Japanese, so she set up a Zoom with him, translated everything. He offered the guitar back. I went and found its sister guitar from the same year, 2 digits off in the serial number, so I could trade him a light guitar. We couldn't go to Tokyo, but the Canadian ambassador said, I'll get you in as a diplomat. You don't have to do 2 weeks of isolation being COVID tested every day. Air Canada offered free tickets. It was like everybody doing a good deed for this guitar. And we went there. They wouldn't let me meet Takeshi or see my guitar till I walked on stage on Canada Day, July the 1st, in the Canadian consulate. So through the filming, this is being a film. They wanted to see my face when I saw this guitar. It's like if your childhood bike or your dog got run over by a truck, and then somebody later came to, oh, your dog had puppies, and here's a puppy, and it's just like your dog. It's Skippy is back, right? So I get my guitar back.
Skippy was back.
They filmed it, and it's going to be a film coming out very soon.
Very cool.
It's being edited right now.
It's Netflix.
Can we say Netflix?
Maybe if they bid high enough.
Okay.
All right. Well, will you come back when it's on?
I will. That'll be a whole different story. That's the guitar I've got now at home. It was the #1 guitar with the Guess Who and BTO with all their hits and albums, and maybe I'll have a #1 again on Rotten Tomatoes or something when the film comes out. But my son and I cut an album that's coming out that's a soundtrack to the movie of The Lost Guitar. Wow. You never know.
You never know.
Might be my magic feather. Might be my Dumbo You Can Fly. Here's your magic guitar. Another hit song.
Do you have a favorite hit song of your own?
I think it might have to be Taking Care of Business. I've had many teachers come to me that teach handicapped kids, altruistic kids, very advanced kids. And to get all their attention in the morning, they always play Taking Care of Business. All these little kids who are attention deficit or whatever.
Love that.
And also guys going in Desert Storm in their tanks to battle, playing Taking Care of Business, or playing American Woman. In their tanks, they're going to fight. When the Canadian astronaut was in the air, he played Taking Care of Business. I got to say that song, thanks to Elvis and me, is like, wow.
Got to feel pretty cool about this. Got 30, 40 seconds left here. What do you want people to know about the auction?
Well, there's guitars. Some of them are on display at the Hard Rock.
Okay.
You can't afford a guitar, go down there with a camera, take a picture of the guitar. Some of them are going to sell for millions of dollars. The 59 Les Paul, they're all going. Mark Knopfler's went for 1.4 million pounds or something like that.
Right,
This was a replica, a reissue.
Right.
Mine's a real one from 59.
Are you okay that you stopped playing violin and went this way?
Really I used to get beat up with the violin. I put it under my arm every Saturday morning, and all the guys would beat me up. We're playing hockey. It's Winnipeg, right?
Our thanks to Randy Bachman, founding member of the bands The Guess Who and Bachman Turner Overdrive. Not every day that we get a real-life rock star in a Bloomberg studio.
That was so cool. We could have kept on going because I feel like even after the mics were off, we just kept talking with him, and it was pretty cool stuff. All right, still ahead on Bloomberg Business Week, we say goodbye to quiet luxury this summer and delve into bold, high design, gem setting, gold shaping, and very expensive jewelry.
You know, I'm not going to say goodbye to quiet luxury.
Okay. Hey, Tim, you do you, okay? But we're going to do us.
Bloomberg Pursuits is next. This is Bloomberg.
You're listening to the Bloomberg Business Week podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
It is time for Bloomberg Pursuits, and this week it is the jewelry special featured in Bloomberg Business Week magazine, which is out on newsstands now, online on Bloomberg.com, and of course always on the Bloomberg terminal. It is, Tim, about loud and shiny accessories.
Loud. I love it. We're talking
$82,000
aluminum and white gold bracelets, a $117,000 necklace, some men's jewelry. This is really interesting. And a much more affordable $3,600 yellow gold and titanium pendant. all in this week's section of Bloomberg Pursuits.
Here with more, the editor of Bloomberg Pursuits, Chris Rausser, along with Bloomberg contributing jewelry writer and founder of La Patiala, the luxury encyclopedia, Kristen Shirley. Guys, so good to have you here with us. Chris, you guys have done these sections before. I always feel like it's fun to go over, but how are you guys thinking about it? How did you realize it was going to be about kind of bolder kind of accessories for this summer?
Yeah, so we do this jewelry special in Business Week every year, and we cover jewelry throughout the year, but then around in summertime, we usually try to see what the trends are, what's out on the market, what people are bringing to the big jewelry shows. And Kristen is an industry expert, and she goes to these shows, and she's a great jewelry writer. So basically, I call her up, and I say, Kristen, what's going on? What are you seeing out there? And she said, this year, people are having fun.
Come on in, Kristen, because I'm curious about how they're expressing their fun. How is this fun manifesting in jewelry? Because you argue that quiet luxury is out the window this summer, and in its place is stuff that's loud and fun.
Yeah, I think there has been historically a lot of dainty jewelry that people have been wearing lots of arm stacks, layering necklaces. And then a lot of demi-fine companies got into the mix, selling things that were more affordable. So everyone kind of looks the same, even if you've spent a lot of money on your pieces. So now collectors are really looking for ways to express themselves through significant pieces that a demi-fine jeweler really can't recreate. And that's coming out with really bold gemstones, big chunky pieces of jewelry, and really fun, exuberant designs.
Hey, Kristen, before we get into some of the pieces, and I really like big and bold, but I agree, you go to Instagram and it's like everybody layering necklaces and rings and it's all kind of smaller pieces. How much of what we're going to talk about in just a moment often then kind of finds its way into the broader consumer space and style space?
This will all be coming probably to the regular consumer space, I would say, in a couple of years, but they'll never be able to recreate the same looks of these absolutely fabulous gemstones and amazing diamonds. That's one reason why demi-fine jewelers do so well with really small diamonds, smaller crystals, because you can't really tell the difference on a small scale. Once you get to really significant gemstones, there's really no way to replace that.
So on the opener page of our section, there is this photograph that I really love by Joanna McClure, and it's of these three huge necklaces, one by Bryony Raymond, one by Belle Perrone, and one by Retrovi, and they're gold, they're beads. There's one with these sort of plum-colored chalcedony beads, and I feel like, Kristen, first of all, these are very price upon request and very expensive, but it's the kind of look, right, that could be reproduced all the way down to a J. Crew at some point.
Oh, yeah. J. Crew would always do those big beads, but the look will be different because it will be, plastic beads or beads covered by ceramic, not like these absolutely stunning gemstones.
Totally.
Yeah, and brass, gold-plated for sure, but I don't think you'll ever get quite that same look, especially if you're a collector.
Wait, we're not going to get the bib necklace? I really love the bib necklace. What is it, 1970? That is so cool.
Yeah, so Bryony, she collects estate jewelry and sells a really beautiful curation from her Manhattan showroom. And this piece is so stunning, it could have been released today. You look at it and you're like, oh, wow, that's from the 1970s, and you really have no idea.
Can we talk about price upon request for a second? Because usually in Bloomberg Pursuits, we get prices. And I was surprised to see in the section this time, Kristen, that there are a few instances where the price isn't there. It says price upon request. I'm requesting to know the price of these things. What's going on?
Well, a lot of the times it's because they don't want to publicize it because they want to keep their mystery, but sometimes it's because they want to be able to negotiate with top clients. If you buy XYZ, this will be a little less expensive, and they don't ever want to seem like they're getting discounts because then clients will always expect discounts. In the high jewelry world, it used to be you could negotiate on pretty much anything. So a lot of brands have pulled back on publishing prices so that they don't appear to be giving discounts, even though they really are.
So it's not. I was a little cynical about
famously, if you have to ask, you can't afford it.
I know.
This is a tough crowd.
But if you have to request it, then maybe you can, because maybe it's negotiable.
Yeah.
Well, apparently you do have to ask.
Hey, I want to talk about men's jewelry a little bit.
Okay.
Or did you want to talk about something else first?
I just want to give a few seconds, if you will, to the Greek jewelry designer that you guys spend a page talking about. What's significant about this individual and what he's been doing?
So Nikos Koulis is an absolutely amazing independent Greek jewelry designer. He has a really defined aesthetic. If you're in the jewelry world, you look at a piece, you automatically know that it's Nikos. And I think that's really hard to do, to stand out as a designer, because there are so many independent designers, and a lot of what people are doing really looks the same. But he has a really unique vision. I love the way that he sets gemstones. There's a ring on the page, and instead of placing the diamond in the center, it's offset on the top. Same on the collar that you see on the bottom. This stunning emerald isn't set inside the necklace. It's set on top and above it, which is kind of unusual. You'd think you'd see it sort of dangling down like a pendant or set into the middle. So I just think it's really interesting what he does. He's at the top of his game right now. He's having tons of press, really having a moment with his high jewelry. And he's about to open 2 new boutiques in Athens, including a made-to-measure atelier where he crafts the most incredible pieces using really rare gemstones.
And Beyonce wore him recently for her Cowboy Carter tour, so just little props there.
Speaking of having a moment, men's jewelry is having a moment. And we're not just talking about like that chain that Mark Zuckerberg wore a few weeks ago that people are talking about. That's not what we're talking about.
The internet.
Did you hear Chris? He said only you would be talking about that. You're right. You know, at first when I started reading this, I was like, are they going to mention Zuck? And they didn't. So Chris, talk a little bit about who's kind of at the forefront here.
So I am at the forefront.
I don't see you wearing any jewelry right now.
I'm wearing a bracelet.
Okay.
We in the section have been pushing jewelry for men for a long time, particularly brooches or pins. And over the past couple of years, you've seen on red carpets, especially Hollywood celebrities men wearing tons of brooches, and then athletes, particularly NFL players, either when they show up for the draft or even before games, or when a couple of them went to the Met Gala, they wear statement necklaces, they wear rings, they wear bracelets, and this is trickling down to kind of regular guys who see these men and look up to them. And big jewelry companies are now getting into the business of what they're calling high jewelry, which isn't really high jewelry. High jewelry is really like the big things that we were just talking about. But
price on request.
Yeah, price on request, exactly. But more elevated stuff with 18 karat gold, with diamonds, expecting that men going forward are going to spend more money on jewelry and on like very noticeable, unsubtle jewelry.
High design watches, Chris, that's a big thing.
Yeah, so jewelry watches with gemstones and kind of like avant-garde designs have sort of been in the background in the watch world because sports watches are really big, vintage watches. And this year, kind of marked by a sale that Sotheby's did of what they call rough diamonds, which were vintage, high design, high jewelry watches. This has become a trend where both in the vintage market and at retail for new watches, people are really getting into kind of high design, really weird looking stuff, including this Cartier cuff, which is a bracelet that has 2 flat ends. On one end has a watch, and you can look at the time through the reflection on the other end. And they're just very cool and striking.
Kristen, I mean, watches, right? Like, I feel like we've gone through cycles with watches where they're practical, they're electronic, they're technology, and then they're pieces of art again.
Yes, I think that now that more women are collecting watches, brands are investing more in really beautiful high jewelry watches. A lot of them have mechanical movements as well. So we're seeing, if you already have everything, what else can you have? And they're creating these watches that are really so striking. Like when you see them, when I saw a lot of them in Geneva, they really do take your breath away because you're wondering how they work. How do they get the mechanics in there? And they're just really stunning the way that they look at time. You know, if you have everything, what do you get? A really wild watch.
That should be our new Pursuits tagline. If you already have everything, what else can you get?
How about a one-of-a-kind ultra-modern necklace design that uses 2 crossing strands of 18 karat rose gold that end asymmetrically in bright ceramic swoops, Kristen?
I love that necklace. So this is by Taffin, a New York-based jeweler known for using beautiful gemstones and colored ceramic in really unique and interesting ways. And this piece is incredible. It uses aquamarine, and each one is about 75 carats, which is massive. You could never, make a necklace with diamond or emerald of this size because those would be, tens of millions of dollars. if they even exist. So it's just really, really a stunning piece. If I ever saw anyone wearing this, I would fall over.
It's gorgeous. I'm partial to aquamarines, and it's off the charts.
The Queen has a really amazing tiara with huge aquamarines because there's, like Kristen said, they can be so big and they're so beautiful. It's one of my favorites.
It's gorgeous. It's gorgeous. It's like looking in the ocean is what I love. All right, you got to go there. Loafers. I feel like I could see them both on you, Chris, and on you. Well, not maybe Tim.
Rude.
But just quickly, let's wrap up with Twinkle for Your Toes.
Yeah, we were thinking about, what else fits with this say goodbye to quiet luxury theme and bright colors and bold patterns. And a big thing this summer is colorful loafers. Penny loafers, regular loafers, boat shoes, but with high quality like materials and cool, crazy colors. And so we found a bunch of great ones from Belgian Shoes, from Ferragamo, from Taft, and really like them.
Come on, Tim.
I'm just looking at
Tim.
Chris's.
Just looked at my shoes.
I just looked at Chris's shoes.
Chris has sneaks on.
He's wearing very practical, like I dropped my daughter off at school before I took the subway into work from Brooklyn shoes.
But even Bass has a two-tone color.
Technicolor loafers. They're in this year. The end of quiet luxury, Carol.
Kristen, are you in on two-tone colored loafers or colorful loafers?
Why not?
Good answer.
I love a little pop of color. All right, we got to wrap, guys. Really fun stuff. And as we kick off the summer, I really appreciate it.
Hey, a big thank you to Kristen Shirley, Bloomberg's contributing jewelry writer and founder of La Patiala, and to the editor of Bloomberg Pursuits, Chris Rouser.
This is the Bloomberg Business Week podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business App. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.